In this video, I'm going to teach you 4 ways to protect your hard-earned profits in your stock trading portfolio. Number 1, you've probably heard of. Number 2, it's quite elemental, but I wasn't practicing it for many years, and there's a good chance you aren't either. Number 3, you might not know about. Number 4, it's really an interesting idea that you probably aren't doing. No, it's not going to blow your mind, but I think you might want to put it to use. Before I show you these 4 strategies, just remember this is not investment advice. Trade at your own risk. These are just tools that I use to protect my profits. So let's jump right into them. Number 1, of course, is sell stops. And if you read William O'Neill's Holy Bible of Trading, How to Make Money in Stocks, I'm sure you're familiar with the stop loss. O'Neill recommends 8%. If you can learn to be more precise on your entry points, I think you can do 5% stops, sometimes even tighter, 4%, 3%, and you can do a staggered stop. You can do like a 5 and a 10, which will give you, let's think about it, 7.5. And then there's 2 types of stops, each with their own advantages. There's a hard stop and a soft stop. Hard stop, you physically type the stop into the computer. Soft stop, you make note of your stop point and you set an alert. And then when the alert is triggered, you get a text and you get a notification on your brokerage account. And then you go and you enter the sell order and you push sell unless it is bouncing strongly. Sell stops don't work unless you push sell. Really quickly, hard stops take all the emotion out of it. You let the computer do the emotional work. That's the advantage. Downside is sometimes you'll get a bounce right after your stop. And then also, there's debate as to whether market makers hunt stops, market makers and whales hunt stops. I personally believe they do. Soft stop is when, like I said, you set an alert. The big disadvantage to that is emotionally you might say, oh, let me give it 5 more minutes. Oh, let me give it 1 more day. Oh, let me give it 1 more week. And suddenly your 5% stop turns into 15. That is the big disadvantage. And then if you are working, if you are, if you are driving heavy machinery for work and your stock alert goes off, you might not be able to stop and sell that stock. All right, so that's number 1. And I've got videos on how to manage sell stops if you surf around on my channel. Number 2, I learned from Mark Minervini, progressive exposure. Basically, you only need to have a 3rd grade education to do this. You trade larger when your trades are working. You trade smaller when your trades aren't working, and you trade smaller and smaller until you get out of the market. I've got a video or 2 on this as well. Seems really simple. Boy, this has helped my trading so much. I'm trading big when my trades are working. I'm trading small or paper trading when my trades aren't working. You'd be surprised how many people, including, hold on, I got a text. You'd be surprised how many people always trade 100-share blocks, or always trade $1,000 blocks, or $10,000 blocks, or whatever, and they never vary their exposure regardless of how well they're doing in the market. If you're not doing that, start doing that immediately, and it will really help you. By the way, I have a Patreon service. I show my current portfolio and focus list, and I go over market strategy. I look at the market indexes and ETFs every weekend, and I do a blog post midweek. There's a 7-day free trial, link in the description. Check it out if you're interested. Now, let's say you're using your stops correctly, you're using progressive exposure correctly, and you're making good progress in the market. You need to, I learned this from Charles Harris, you need to protect yourself from yourself. And by that, you got to take away some of the ammunition in your portfolio. So 2 ways you can do this. And I do both of these. One, and this is, I guess, the 3rd strategy, is move some of the money periodically into a high yield savings account. Now, this isn't your savings account at, your local, I don't know, Western Bank on the corner of Main Street. This is a particular high yield savings account. Most of the brick and mortar, I don't know about that, but anecdotally, it seems like a lot of the brick and mortar banks don't have high yield savings accounts. It's mainly the online banks. Mine is through E-Trade, but I know a bunch of different online banks offer high yield savings accounts. Just type it in, Google it in your area. Mine is currently returning 4.25% interest. Now that'll go down slowly as Powell lowers interest rates. But that's still interest rates right now. Inflation is at 3.1 right now, February 15th, 2024. And my account is paying 4.25. So you're beating inflation pretty handily. So let's get back to the strategy. Periodically, maybe that's every time you have a big update. Maybe that's every Friday if your account is up. Maybe that is every time you hit a goal, like when your account hits 25 grand and then 30 grand. Oh, geez. Now I got a phone call. Okay, anyway. And so then when the market turns south, and it will, you are going to get stopped out of some of your stocks, and you will, if we get a nice, 1 or 2 year bull market, you're going to have a really nice pile of money in savings. And then you can do with that what you wish. You can put it in real estate. You can spend it on a vacation, upgrade your home, patiently wait until market conditions are better, and then move it back into the market, etc. So far we've got stops, progressive exposure, skimming your account into a high yield savings account. And then here is number 4. And before I share number 4, if you haven't liked the video, would you mind liking the video? Thanks. I appreciate it. Number 4, now, when we're in a bull market, especially right now, when we're in an early stage bull market, and the chances, in my opinion, the chance of a pullback in the S&P 500 of more than 10% are very low. So when we are in a good bull market, not overheated, not a late stage, then instead of skimming your account and putting some money each week or what have you into a high yield savings account, or in addition to, what you can do is put it into the S&P 500 ETF. Mine is the SPY, SPY through E-Trade, but I think there are some other different S&P 500 ETFs. Just Google or check what your brokerage offers. Most of them offer the SPY. And in doing so, it's not protected like your high yield savings account money, but your downside is pinched off drastically, and you can still capture some upside because the S&P 500 averages about 10% or so per year. That'll double every 7 years, and some years it's up 20%. Wasn't it up 23% in 2023? I'd have to check, but I think so. And then if you have some trading acumen, when the market gets really toppy or showing signs of rolling over, maybe the breadth is really narrow, maybe it's getting parabolic, whatever, then you can move some of that money out of the S&P 500 into your high yield savings account, or not. Maybe you just leave it. If you're 20 years old and you're going to be trading for 40 years, just leave it in the S&P 500 and ride out those big pullbacks. The last big pullback was in 2022. At its peak, high point to low point, it pulled back about 27%, the S&P 500 did, which sounds like a lot. But by the end of the year, I'm just looking on the screen here, it finished at like an 11% loss. And so I suppose that sounds a lot, but if you think about the growth stocks that you may have moved money out of, Zoom, for instance, went down 90%. So I would think that a 20% loss is a heck of a lot better than a 90% loss. So I encourage you to use all 4 of these methods. I do stops, progressive exposure, high yield savings account, and skimming some into the SPY. If you have any other ideas for trading risk, let me know in the comments below. Also, my partner is Seeking Alpha Premium. They have, it's an amazing database of articles, transcripts, news items, fundamental information. There's a link in the description below. You might want to check that out. And they have a new thing called Alpha Picks, where they use quantitative analysis and expert analysts to pick, what can we say? Hot stocks. It's doing really well so far this year. And there's a 10% discount right now if you use the link in the description. Thanks for watching. I'll see you in the next video.